All right, ladies and gentlemen, it's Aaron Fragnito, your host of the Passive Cash Flow Podcast. I'm back today with a topic, of course, everyone's talking about it, the coronavirus, and how will the coronavirus affect our real estate values here at People's Capital Group for our investors and your real estate values as well. So we're going to talk about three scenarios today, three different scenarios that will affect our economy for a short period of time, a mid-period of time, or a longer period of time. And I'm going to go through some of the different scenarios to cause this possible recession and how that could affect our real estate values here and how it would affect our investors. So let's break into it here. I know this is a tough time. We want to continue to monitor what's going on and wait and see what's happening. Every day we get new information, but what may happen next is that there could be lockdowns in certain areas. Certain counties might lock down states or the entire nation. Okay, we've seen that in parts of Italy there where they lock down, and basically you can only go to work if you are a firefighter or a sanitation worker, someone that's necessary to saving lives, really, EMS, doctors, but of course real estate investors and mortgage brokers and all, we all got to work from home. So that is what most likely will happen next. And lockdown means no businesses, no restaurants are open except for supermarkets and pharmacies and hospitals. So that's going to really cause an effect on our economy. We already see the stock market losing a lot of its momentum. About 30% of its gains over the last 2 years have been lost here, and that is very frustrating for many of our investors that are heavily invested in the stock market, and we feel for them. But with our real estate values here, we don't see that type of drop ever happen overnight, and that is one of the reasons we do think real estate in the North Jersey market, multifamily real estate, not storefronts, not office space, those spaces are going to get hit pretty hard. But multifamily real estate, that's middle of the road, not the most expensive, not luxury real estate, but not super low end real estate either. But middle of the road real estate, those types of apartments will remain in high demand because people can afford those in tough times as well. So we do focus on buying apartment buildings that are middle of the road, and because of that, we do continue to see demand, although I think right now we have not really seen the impact yet on the real estate market that this virus will have. So if there is a slowdown for about a month, I think that's going to cause a small recession of about 3 to 6 months, where we're going to see a slowdown of growth and rent growth and property values. And then I think it should pick up again because the banks are well funded. There's a lot of cash in the coffers. This is not like 2008. There is a lot more strength in the economy. Jobs are stronger. Unemployment is very low. But if we all close our businesses for 30 days, that's going to be tough. And the government is going to support our local economy with stipends and payments and things like that, which is great. But that can only last so long and only have so much of an impact. So I think what's going to happen is eventually we're going to say, listen, if you want us to be quarantined any more than a month or so, it's just not a realistic option. Americans need to get out and go out and live. And we're seeing this virus also usually when middle-aged people get it who are healthy, they fight through it and they survive just fine. It tends to kill older individuals over the age of 80 or people with weak immune systems. So, of course, you want to be careful and try to avoid it. But I think it's going to get to a point where if we do stay quarantined for too long, we're just going to go back out and live our lives and say, hey, the risk is worth the reward, And if that doesn't happen, though, and we are quarantined for a longer time, and there is some type of national lockdown for some period of time, that would affect our real estate values, that would affect the recession of some type to take place, I think. And markets grow and markets shrink. So it's not the end of the world if there's a small recession at this time. Again, the banks are well funded. It's a lot different than 2008. I don't see a collapse of the real estate values as we saw back then. But I do see people possibly losing their jobs, possibly being out of work for some time, and we're going to work out payment plans with those individuals. If we know you're going back to work in 2 months, it's a lot different than losing your job, where in 2008 you lost your job. Well, now you might be out of work for a month or two, but we're all going back to work at a certain time. So really, we recognize that we're going to work out payment plans with a lot of our tenants if times get rough. The other thing is, if there are evictions, well, what often happens are your tenants that have the lowest income and are paying the least amount of rent tend to be evictions sometimes. So that allows us to actually turn over the units for higher rent. So sometimes evictions can result in a positive for the landlord. Now, if there is some type of long-term quarantine, again, I don't see us actually cooperating. The American society, we're too energetic and we have too much going on to really close our businesses for more than a month or so. But if there were some type of 6-month, close down a business, which is very, very unlikely, I could see obviously a large recession hitting for 12 to 18 months in that case thereafter. But I really don't think that business owners and consumers alike are going to be able to quarantine and cooperate for more than a month or so. And I think we're going to really try to nip this in the bud right now. And I see a lot of people taking it seriously. We're trying to take it seriously here at People's Capital Group. And, we're still providing an awesome service to our investors. We're still allowing people to move their money from the stock market or whatever it is into passive cash flow opportunities in the New Jersey real estate market. So if you want to learn how you can do that, if you want to diversify into real estate, go to peoplescapitalgroup.com. We are focused on servicing our tenants right now, making sure our tenants are safe. A happy tenant means that we have a happy investor, but we're also really focused on communicating with our investors. We know it's a tumultuous time, so we want to be a resource for them to not only keep learning about how to protect yourself through real estate, but also, what's going on with our buildings, how are rent collections, how are leasing. Our rent collections are fine. Our leasing, we just leased a unit last week for top dollar. So we have not seen any effects just yet of this virus, but I do recognize that there could be some slowdowns in the future. So we'll probably keep disbursements in this quarter. That allows us to keep extra cash in the coffers for the unknowns over the next quarter or two. And that's a great way of just making sure you're batting down the hatches, you're well protected, the assets can stand on their own 2 feet if there's a slowdown in rent collections. And that's good for our investors to protect their investment. And then if it's less of a slowdown than we think, well, then those distributions are sent out down the road when things calm down a little bit. All right. So hopefully you're safe. Hopefully you're healthy. Remember, don't panic. Okay. Don't watch too much of the news media. They're there to get you to click on whatever they're saying. So hopefully you're improving yourself through this time and improving your investments and keeping your family safe. And if you want to learn more about diversifying into real estate here with us at People's Capital Group, go to our website, peoplescapitalgroup.com. Have a good day.